Good morning, Jags. This is Fahad. Today is Thursday, August 27th. Let's get started. This is episode 4 of the series that we are running in Jaguar Media called Chinese Tech Demystified. And once again, we have Chronicle here. Hi, Chronicle. How are you?
Doing all right. How are you?
I'm doing great. Thanks for asking. Okay, so I love this series. We continue to point out to these new opportunities in under the radar Chinese tech stocks and learned so much along the way in this process already. So today we're going to cover this stock called Dada Nexus, symbol DADA. Let's get started. Tell me about it.
Sure. So Dada Nexus is a recent IPO. It's a company that has two platforms. The first one is called Dada Now, and it's basically an on-demand service where people order fresh foods and groceries from home, and then contracted riders will go fulfill those orders within the hour, kind of like an Uber for groceries. The other platform is JD Daojia, which is on the right. Or JDDJ for short. Now, this part of the business is a subsidiary of JD, and this is a platform which facilitates e-commerce for small and large retailers and basically helps them get connected. So this handles everything from orders to inventory, warehouse management, CRM, marketing, the whole package. And these two platforms work in tandem. So JDDJ handles the logistics and supply chain stuff, while Dada Now handles the fulfillment and the last mile delivery to people's homes. Their network spans currently 2,500 cities, and it's also pretty comprehensive. But all that said, here's the thing. Right now, on the next slide, the company is mostly just in groceries and fresh produce. But if you were to read their prospectus, management says their ultimate goal is to get every store and every street connected and to bring people everything on demand. So imagine you're at work at your desk and you just don't have time to get some light bulbs or maybe some new speakers for your computer. And so you just open this app and it'll list all the participating hardware stores within a 10-minute radius of where you are, including maybe the one your friend runs, right? And then you order your light bulbs and your speakers, and within 30 minutes a rider arrives at your house with the stuff you ordered. So that's the ultimate vision here for Dada Nexus. Even though they're just mostly doing groceries currently, they ultimately want to fulfill everything. That's a huge ambition.
So tell me about their earnings report, because the part that I find most surprising is that unlike JD that posted a really strong quarter and the stock spiked sharply, this one, Dada, having so much dependence on JD with 60% of their revenues coming from providing the logistics and fulfillment centers, they reported earnings. The stock was at 30 and currently is trading at $26 and change. So what changed? What are one or two things that basically spooked investors, and whether we should be concerned about it at all?
So this part is all covered on pages 4 and 5. Do give it a read because it details how the company segments its revenues, because it's important to understand what exactly the company considers as revenue for Dada Now and what they define as revenue for JDDJ. These two businesses are highly overlapping, so it's important not to get confused over how each platform derives its sales. So absolutely read that section. What I'll say here is that the report itself wasn't bad. On top of the numbers and graphs on this slide, um, what I'll say is that the company has already made 78% of last year's total sales in H1, and they still have the typically busy fourth quarter to come. And the other key metric, gross merchandise value, has been reaccelerating nicely as well. But where the concerns come in, so we just had the pandemic, and everybody stayed at home and ordered groceries from Dada. And so as China gets out of this pandemic, naturally we're gonna have people who still want to physically go to supermarkets and see the food they're buying. And this is where the concerns come in. Um, Naturally, we're going to see Dada Nexus lose some of those customers back to the supermarkets as we get into Q3 and Q4. So I think that's where the market is worrying a bit. And there's another concern, which I'll touch on in a bit more.
Now, staying on the GMV growth side, I understand that optically this may seem like a sequential deceleration, but just to point out to all the audience watching this company posted about 60 some percent growth rate 2 quarters ago, which accelerated to 72%. And in the most recent quarter that was posted 3 days ago, the total revenue increased by 93% year over year. And then for the Q3, which is the September quarter, company guided revenue growth between 82 and 91% year over year. So if you take the midpoint of that, call it about 86, 87%. Yeah, sure, it's a step down from 93% to about 86% quarter over quarter. But on a year over year basis, in absolute terms, these are monsters numbers, huge numbers. So maybe the stock is just unjustifiably down post earnings, and maybe there's a lot more positive than negatives to read into that. Going forward, to the next slide. Tell me about this one. What are Dada, Nexus, and JD are working currently together on? What are their expansion plans from this point on?
Sure. If we look at Dada Nexus in isolation, they're continuing to build on their partnerships with China Resources Vanguard, which runs some of the largest chains across the country. They've also launched a dedicated delivery initiative with a couple of other partners. You can read all about that on pages 5 and 6, but personally, I think the bigger catalysts going forward come from JD's going rural expansion plans in the lower tier cities, because as JD continues to build out, Data Nexus will become a direct beneficiary as it allows them to connect more retailers to their JDDJ network. And that would provide impetus for them to bring Dada Now to those new places. Earlier this year, JD added a couple more logistics parks in their network, and they made sure to do so before the 618 festival. And Dada was able to reap the benefits of that. So both JD and Dada worked together to run promotions leading up to the major shopping festivals in Q2. Like they did a lot of outdoor live streaming and viral campaigns. And on the third paragraph of this slide, you can see the impressive results of that. Like we're talking about almost 500% growth in lower tier cities. On the next slide, so we're going to jump in straight into what the industry looks like today. But if you're interested in reading about what took place between 2014 to 2019, that's on pages 7 and 8. But currently, we're in a sort of post-consolidation period where, because of the dominance of Alibaba and JD, new entrants have had to be creative with what they're doing. And we've provided several examples here. Like we've been seeing grocery vending machines, unmanned stores, and although a lot of them didn't work out due to perceptions about freshness, um, we've also seen automated and cashierless restaurants, and some restaurants are now fully staffed with robots. If you do a YouTube search of robot restaurants in China, some of them are pretty entertaining. On top of that, we have augmented reality and facial recognition. Like we can see the image here that's on the most left. That's an Alibaba app where you're chasing this cat around the shopping mall and you win prizes and discounts if you manage to catch the cat. But if we're talking about food itself, they've also come up with facial recognition software where people can pay for food just by smiling at the camera. And that's already been around for a couple of years now. And of course, we have Pinduoduo with their social group discount philosophy. 2019 was the year when Pinduoduo saw their shopping users explode. So if I had to sum it all up in one word, now that the market has been consolidated by the giants, the industry today is all about creativity and experimentation.
Moving on. Now this is the chart that really gets me excited. This is some incredible growth rate in the GMV in the Chinese supermarket segment for local on-demand retail. At this rate, and this seems to be accelerating based on these projections. You think that JD will continue to benefit from this trend, and as a result, the fulfillment center provider, the Data Nexus will also naturally from this will continue to benefit as well.
Yeah, so this is going to be the most important part of the video. So in keeping with the experimentation theme I was talking about, what has happened within the supermarket space is that JD and Alibaba decided to bridge the gap between online and offline retail. And so what they've come up with is a sort of hybrid experience where people physically go to the supermarkets to shop for their groceries, and they're using their phones to interact with all the different products as well as their surroundings. But at the same time, these stores also serve as fulfillment centers for online orders, serving the and surrounding neighborhood. And if you're curious about what this whole thing looks like, I did put a hyperlink on page 8 that takes you directly to a YouTube video of what this experience looks like. Alibaba's chain is called Fresh Hippo, which is the above image on the right, while JD named theirs 7 Fresh. And the main motivation for these stores is because they found that people weren't comfortable, vast majority of people weren't comfortable buying fresh food online. And so this hybrid model is now the hottest trend currently rather than delivery. So from Dada Nexus's perspective, this can seem slightly worrying because if we look at this graph where we will see that Alibaba and JD have been right on the money, in the sense that the vast majority of people still want to go and buy their groceries. I mean, by 2023, we're only going to see 10.6% online to offline penetration. So it's not that Data Nexus cannot see growth. They're still going to see a lot of benefit because of 7 Fresh's fulfillment. So people who order through online through 7 Fresh, that's going to be Data Nexus's sales. But what I'm getting at is that the company is going to end up being a big fish in a slowly expanding pond unless they start branching out and making fuller use of their last mile network. And recently, this is the point I said I was going to touch on. They have been starting to build partnerships with hardware stores. They've connected 2,500 hardware stores in the last quarter, as well as the biggest pharmaceutical chain in China. They're working out a partnership with them, and we want to be seeing more of that. And very quickly, the other immediate issue, as I've touched on, is that some of the surge that Data Nexus saw from users during the pandemic, they're not going to retain some of them as China returns to normalcy.
Got it. This is interesting stuff. The penetration rate, the way it's just accelerating while keeping the 69% CAGR growth through 2023. At that rate, ultimately, this $5 billion company naturally is going to power higher over the long term because people will see the trend that is just so powerful underneath. Good stuff. Um, Now, moving on to the next one. Now, this is where um, the most important question is the stock has pulled back from $30 per share to about 26, 27 currently. Is the verdict here finally to basically, is this a buy? What is the single biggest, most important risk that you see on, or this is just, are we basically take a small position because this is still a speculative name that has a lot to prove itself? Overall, your thoughts on this one for the entry standpoint?
Okay, so I think it comes down to whether or not we believe Dada's management has what it takes to push on and become the Uber of everything, which is their ultimate goal. Because purely sticking in the online groceries business is not going to cut it. Right now, Dada's growth numbers look great, but that's because of JD's expansion projects rather than growing fast growing adoption of online to offline penetration in e-grocery. So this has been unprofitable for several years now. So ultimately, what I'm trying to get at here is that Dada is currently not making the full use of all the tools and networks that JD has given them. They can be doing so much more than just groceries, and they are starting to make efforts into expanding out from groceries. So if you're asking whether this or not this is a buy, this is where you're going to have to make a gut decision, unless you've met management personally, that is. If you think
Yeah,
this management has what it takes, then this, and if you're willing to ride volatility of a recent IPO, this is a buy. On the
yeah,
other
I
hand, if
think. Sorry, my personal view on this is this. Look, I think the growth is easily identifiable. The partnership with JD is a major, major positive for the stock and for the company, and that's going to last for a long period of time. The trends are still in very early phases. As we saw, the graph of the penetration chart is in the single digit percentage, which has significant amount of room to grow. There's a question. I think, in realistically, even if the company is unable to do a lot of partnerships with many other companies, I think that as long as JD itself continues to push higher, with as it grows into this online platform, I think that it's reasonable to assume that Data should outperform along with it compared to all the other peers. And secondly, most importantly, they are showing the progress of signing more partnership. You mentioned yourself Walmart partnership, pharmaceuticals, or online ordering of technologies, from speakers to gadgets to almost every single thing. And I think we will see more and more announcements of that going forward. So I think this is a trend, a secular trend, and the company will grow with the secular trend, probably well above the industry growth rates itself. And the guidance of 80, between 80 to 91% year-over-year growth rate for the next quarter, it speaks for itself as well. Even though some people got spooked over a small deceleration from 93% growth rate they posted in the second quarter. From a risk standpoint, my personal view would be, based on this presentation, it's the management that needs to develop itself into more coherent and a stronger leadership position, rather than three top management, all tech guys running the company, right? And that's where I think this is where, if you're looking for institutional support behind this stock, and if you're looking for more established name in the industry, where the big money can basically pile into this name, I think that's where the things needs to happen. A stronger board of directors, much more powerful management at the top, and much better guidance, and much better overview of the overall trend for the long term. And I think that's what the institutional support will find most attractive part over the course of long term. But until that moment, this is definitely remains a bit of a speculative name, but it's heading in the right direction. What do you think? Your final thoughts?
Yep, I completely agree. If we touch on all of that in the last page of the write-up, so everything is detailed there, our final verdict. So
Yep.
absolutely read the write-up.
All right, so folks, looking at the chart, if you look at this stock hit a high point back in July of 34.90, and then recently came earnings come out. Now it trades at $26 per share. It has pulled back slightly. There's major support around $23 per share, which would be another 7 to 8% to the downside if this weakness continues. But I think, while speculative at this point, this could be a behemoth, a strong, powerful name over the very, very long period of time. And so, a name that is at least be worthy of the attention, to see if this strong, powerful secular trend can take this stock to new 52-week high, and provide more upside and reward investors over the course of next several quarters and years to come. Great presentation, Chronicle, as usual. Please, once again, reminder, the slide deck as well as the presentation will be uploaded on the website, as well as this video. You can track it from there. And that's it from us. And we'll be back again for the episode 5 in the future sometime. Thank you very much.